following is an update and technical analysis on Tesla, a company of the consumer cyclical sector in auto manufacturers based upon the much larger picture in the weekly interval, where I had mentioned on the 16th of September 2023, where trading spot price 273.09, that it would be a great risk reward objective short trade entry based upon a very key major primary reactionary downtrend line, call it a multi 3-year price resistance level dating back right off the November reactionary all-time highs of 2021, and that it would be ideal to begin scaling in short, move right back down on a re-challenging of this primary reactionary uptrend line based upon the December 2022 reactionary lows, on an additional retest of this major price support key inflection point. And here's the update, where the entirety of that trade was good for, call it a 25.12% crash to the downside, and we are testing major price support level, call it multi-year key inflection point, major transition point in my opinion, with just a multitude of reactionary highs and lows really across the board there, with a ton of support down below in key technical moving averages, with the 50 weekly and 200 weekly moving average hovering in down below. Call it as you will. This is a weekly breakdown sell signal based upon this much larger time frame, which usually can counteract and overpower near-term intervals. And really what is so significant about the multitude of this price support, price moving averages support, triple transitioning point, again, it would be ideal for a great risk reward aggressive long trade entry for maybe even a potential retest, re-challenging of the 50 weekly exponential moving average at 229.65 price resistance, and additionally a move right back up to the bottom of the primary trading range for a much larger move to the downside. Now, if we undercut this significant triple transitioning point of resistance and we put in a solid weekly candle close below the 212.64 price support, what will follow is a significant surge of a negative impact on the critical technical momentum indicators here on the much larger weekly interval, with already a confirmed bearish crossover here in the moving average convergence and the oscillator testing its zero line threshold. You have a strong weekly red candle close below the oscillator histogram, and talk about compelling damage that will take out a ton of stops, forced liquidations, margin calls on a potential re-challenging of the 181 price support, which could closely synchronize with a primary, the biggest key inflection point really going back since 2019 in the summer, with just a multitude of reactionary lows right across the board, and sinks right through the fastest rate hikes in history that just bludgeoned the heck out of the stock here. I could see also a re-challenging of that key inflection point, which would be pivotal for long-term investors, long-term traders, and leap options to hold that key transitioning level really at all costs, dual price support level. And then initially, if you break down that primary uptrend line, the most major primary uptrend line correlation to the 2021 reactionary downtrend line, you will have an additional bigger breakdown secondary sell signal, in my opinion, only increasing the odds for a much larger crash.